Hello everyone, welcome to Financials. In today's video, let's study about personal finance and the areas of personal finance. Personal finance is the process of planning and managing personal financial activities such as income generation, spending, saving, investing, and protection. The process of managing one's personal finances can be summarized in a budget or financial plan. This guide will analyze the most common and important aspects of individual financial management. Areas of personal finance. Income refers to a source of cash inflow that an individual receives and then uses to support themselves and their families. It is the starting point of the financial planning process. Common sources of income are salaries, bonuses, hourly wages, pensions, and dividends. These sources of income all generate cash that an individual can use to either spend, save, or invest. Spending. Spending includes all types of expenses an individual incurs related to buying goods and services or anything that is consumable. All spending falls into two categories: cash and credit. The majority of most people's income is allocated to spending. Common sources of spending are rent, mortgage payments, taxes, food, entertainment, travel, credit card payments. The expenses listed above all reduce the amount of cash an individual has available for saving and investing. If expenses are greater than income, the individual has a deficit. Managing expenses is just as important as generating income. Good spending habits are critical for good personal finance management. Saving refers to excess cash that is retained for future investing or spending. If there is a surplus between what a person earns as income and what they spend, the difference can be directed towards savings. Common forms of savings include physical cash, savings bank account, checking bank account, money market securities. Most people keep at least some savings to manage their cash flow and the short-term difference between their income and expenses. Having too much savings, however, can actually be viewed as a bad thing since it earns little to no return compared to investments. Investing. Investing relates to the purchase of assets that are expected to generate a rate of return with the hope that over time the individual will receive back more money than they originally invested. Investing carries risk, and not all assets actually end up producing a positive rate of return. This is where we see the relationship between risk and return. Common forms of investing include stocks, bonds, mutual funds, real estate, private companies, commodities, and art. Investing is the most complicated area of personal finance and is one of the areas where people get the most professional advice. There are vast differences in risk and reward between different investments, and most people seek help with this area of their financial plan. Protection. Personal protection refers to a wide range of products that can be used to guard against an unforeseen and adverse event. Common protection products include life insurance, health insurance, etc. This is another area of personal finance where people typically seek professional advice. We have come to the end of this video. I hope you guys liked the video. Hit that like button and don't forget to subscribe to the channel.